SoFi Stock News Update, SoFi Earnings, Analysis, Review, and Price Targets. Should you buy SoFi stock? Hey there, finance enthusiasts! I'm thrilled to have you here as we dive into the world of SoFi and uncover what's driving the excitement around this groundbreaking company. In today's episode, we have a trio of captivating articles lined up for you. We'll explore why SoFi is more than just a student loan refinancer and discover the other compelling reasons to consider investing in this fintech powerhouse. Then, we'll address the burning question in everyone's mind. Is it too late to jump on the SoFi stock train? And finally, we'll unveil a hidden gem, the top fintech stock you should buy in July, with SoFi taking center stage. From financial revolution to potential growth catalysts, we'll leave no stone unturned as we bring you expert insights, analysis, and expert opinions. Forget student loans. There are a number of other reasons to buy SoFi. Let's dive into what's happening with SoFi, the online banking company. The stock has had its ups and downs since going public, but it's currently trading at a discount. Investors have some concerns, including cash burn, integration of acquisitions, and challenges in the lending business due to the student loan repayment moratorium and competition from big banks. But here's the exciting part. There are hidden gems in SoFi's business that often go unnoticed. The company generates revenue from lending, technology, and financial services. While student loans are a focus, personal loans have seen a significant increase, driving overall loan originations up. What's even more intriguing is SoFi's expansion into technology and financial services. They aim to be one-stop shop for banking needs, similar to how Amazon Web Services transformed the tech industry. SoFi has successfully cross-sold its products to a growing number of members, paving the way for revenue growth and margin expansion. The numbers back up this growth story. SoFi's technology segment and financial services revenue have seen impressive increases, and the company has made significant strides in reducing its net loss. Management is optimistic, aiming for net income positivity by the fourth quarter. Now, let's talk about valuation. SoFi stock has performed well this year, and its price-to-sales ratio suggests it might be undervalued compared to similar banking platforms. All things considered, SoFi has strong growth potential, a focus on technology and financial services, and the possibility of turning a profit soon. Long-term investors may want to consider gradually building a position in this stock and exercising patience as the company continues executing its vision. In the world of modern banking, it appears that SoFi is leading the way while its competitors are merely renting space. Is it too late to buy SoFi stock now? The rally of SoFi stock has been nothing short of furious, with its price doubling in just 6 months. Starting the year at $4.50, it skyrocketed to over $10 in June before experiencing a pullback to $8. But here's the thing. This pullback might not be over just yet. The article warns that it could continue throughout the second half of 2023. However, despite this pullback, investors are advised not to abandon ship entirely. Why? Well, SoFi Technologies has actually been delivering impressive revenue growth and reducing its earning losses, so there's still some promise there. One major catalyst for SoFi Technologies is the recent Supreme Court decision. The court struck down the Biden administration's plan to forgive a significant number of federal student loans. This means that the pause in required student loan repayments will soon come to an end, with the first repayments expected in October. But here's where the things get interesting. The article cautions against assuming this automatically means a surge in the SoFi stock price. Why? Because the market has already taken these developments into account. It's what we call the efficient market theory in action. In other words, all the news and expected future catalysts are already factored into the stock price. So the previous rally we witnessed reflected the market pricing in the anticipated benefits from the resumption of required student loan repayments. However, There's an interesting perspective from analyst Giuliano Bologna. He believes the rally was somewhat overstated and even initiated cover of SoFi Technologies with a sell rating, setting a price target of $5. It's definitely not the most optimistic outlook. So with all that said, is it too late to jump on the SoFi stock train? The article seems to think so. After such a wild rally followed by the start of a pullback, it might not be the best time to enter the market. Instead, the recommended strategy is to let the pullback continue for a while and closely monitor SoFi Technologies' upcoming financial reports. If you're looking for a specific entry point, the article suggests waiting for the stock to fall to around $6. And remember, patience is key in dealing with the market and SoFi Technologies. Don't go chasing prices, my friend. Top Fintech Stock to buy in July. SoFi Technologies is making a big impact in the fintech world this year, with technology stocks performing exceptionally well. The Nasdaq Composite up by 31% year to date, and other fintech companies like Upstart seeing massive stock price surges at 182%. It's evident that this sector is flourishing. SoFi Technologies has been on an impressive upward trend, with its shares rising by approximately 78% so far this year. The exciting news is that there's still plenty of room for further growth. One reason for the buzz around SoFi is the Biden administration's decision to end the moratorium on student loan repayments. This development is expected to give SoFi a significant boost in revenue since student loan volumes were down by more than 50% in the first quarter compared to pre-pandemic levels. Despite this decline, SoFi managed to increase its lending revenue by 33% through higher interest rates and record volumes in personal loans. In fact, they originated an impressive $3 billion in personal loans, representing a 46% increase from the previous year. But SoFi's success extends beyond student loans. The company made a strategic move by acquiring a bank and obtaining a bank charter, which has proven to be highly beneficial. This decision allowed SoFi to expand its lending activities and reduce deposit costs. Deposits grew by 37% year over year, reaching $10 billion, and a remarkable 97% of those deposits are insured. This growth in high-quality deposits has resulted in lower funding costs for SoFi's loans. The acquisition of the bank also strengthened their financial services business, which includes checking and saving accounts, investments, credit cards, and more. This segment experienced an astounding 244% year-over-year revenue growth, reaching $81 million, and the number of products used by customers increased by 51% to 7.1 million. SoFi's technology platform, where clients can launch banking-as-a-service products, has also performed well, with a solid 28% increase in revenue from this segment. Overall, SoFi's revenue for the first quarter surged by 43% to $472 million, and their net loss significantly decreased to $34 million compared to $110 million in the same period last year. Looking ahead, SoFi is already surpassing its own projections. They expect adjusted net revenue of $470 million to $480 million for the second quarter, reflecting a 32% to 35% year-over-year increase. They have also raised their full-year net revenue forecast to a range of $1.96 billion to $2.02 billion. Additionally, SoFi anticipates achieving adjusted earnings before interest, taxes, depreciation, and amortization, or EBITDA, of $268 million to $288 million for the full year and aims to achieve quarterly GAAP net income profitability by the end of 2023. Considering SoFi's growth potential, it still offers an attractive valuation with a price-to-sales ratio of 3.8 and a price-to-book ratio of 1.5. SoFi appears reasonably priced compared to its industry peers. In summary, SoFi Technologies has made significant progress due to the strength of its banking operation, the rebound of its student lending business, and the continued growth of its technology platform. With a positive outlook, SoFi is well positioned to overcome challenges and seize opportunities. For investors seeking an exciting fintech stock, SoFi Technologies is definitely worth considering this July. Well, that's it for today. Thank you for joining us. If you found this video informative and thought-provoking, don't forget to like and subscribe to our channel for more exciting content like this. And as always, we appreciate your support and engagement. So, until next time.